Hello traders, and welcome to another educational video brought to you through FXCL Excellence in Trading. Traders, great to be with you. It is Saturday morning, April 26th in Thailand. However, this is the Friday update, and we do this every Friday after the New York session. Great to be with you on a beautiful Saturday morning in Pattaya, Thailand, coming to you from the sunny beaches. Traders, if you would give me a minute and let me introduce myself to you. My name is William K. Gilday, and I am your moderator today as we go through the Friday update. And it's great to be with you on this, again, beautiful, hot, sunny day. All right, I've been a Forex trader. I started in the year of 2006 as a part-time trader while I was still working full-time in the fire rescue department in the great state of Florida in the United States. And in 2008, I retired after 27 years of service. And in about 10 days after I retired, I got on a big jet plane and came to the great country of Thailand. And I decided to stay and never went back. So in 2008, I became full-time in the Forex markets, and I just absolutely love what I do. So today we're going to go over some currency charts, we're going to talk about some fundamentals, and we're going to basically wrap up the week, and we're going to do one projection for next week, what I think is going to happen on one of the currency pairs. But before we do that, let's go ahead and take care of some legal matters, and let's take a look at our risk disclaimer. Traders, as you know, Forex has large potential rewards, but also has a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. The most important part is do not trade with money you cannot afford to lose. Traders, if you're trading your rent money or your mortgage, maybe you need to rethink your situation. Okay, let's move on and let's talk fundamentals. Quite a lot of stuff has happened in the last week as we've winded down. Starting on Thursday and Friday, the situation with Ukraine and Russia and President Putin has really started to affect the markets. We saw a lot of market movement as data filled out through the day reference Putin and the Ukraine, and they're doing exercises and they're coming right up to the Ukraine border and turning their jets right at the border and just going back to the exercise. So there's a lot going on there, and the markets are really starting to hammer this. Moody's has downgraded Russia's sovereign rating to almost junk. So it's coming a situation now that the markets are finally starting to react to what's going on. President Obama came out on Friday, which was late Thursday, Friday, and has put his arm out to Putin and is trying to speak to him about diplomatic ways that we can solve this situation. So that's something we're going to need to watch as we move into the early parts of next week and through the weekend. And on that note, I would not advise holding trades over the weekend due to the volatility of the markets reacting to this situation. Let's talk about another issue, which is the Bank of Japan. The Bank of Japan this week has been speaking and basically has said that their increase in tax rates has really not affected them, and they're not expecting it to affect their economy. However, if they start to see any problems, that they are willing to place in more stimulus, as we would say in the Forex market, for years and years, they will do another intervention. Let's talk about the dollar. The US dollar has been weak for the majority of the last, I would say, 8 trading days. However, on Friday, it started to rebound, and we started to see some dollar strength. The numbers that came out during the week were mixed for the US dollar. But the dollar did remain weak until Friday's trading in the European session, where we started to see this turnaround. So I am saying that it's very possible that in the next week of trading, we're going to see some dollar strength, euro weakness, and yen stability, providing they don't take any action. So I think we're going to see the yen start to build strength and the dollar to build strength. Okay, let's get over to the charts. First one we're going to take a look at, traders, is the pound dollar. And this is a 15-minute chart. And I just wanted to show you that this 15-minute chart shows you the red arrow in the middle of the fib there, where I was expecting to take this long. And during the European session, the pound had some positive data come out. It moved the market 40 plus pips. And what happened after that? The pound actually sold off. And we saw a dollar strength. It came all the way down to that 67.94 area and headed sideways, hit the 200 exponential moving average, which is the green line on the chart, went sideways, and then came back and retested the 67, 98, 99 area. And now, as the markets are closed, that's where it sits. So it will be very interesting to see how we open in Asia, as Asia will react to this price action and the fundamentals that come out late in Friday. All right, let's take a look at a trade plan that worked. This is the US dollar, Swiss franc 15-minute chart. This just was some really nice trading. On our trade plan, you can see where I placed a fib. I placed the entry arrow in that price area. Realize, trader, that the arrow was placed when price was up at the top of that fib. This pulled all the way back down, went sideways, continued up. Look at what it did. Remember, I always say that this always gives you a double tap. And this gave us more than a double tap, but ended up coming all the way back down and then pulled all the way back up late in New York before the markets closed. And look at where we are now. So we're edging towards that 200 exponential moving average, which is the green line. And that's at 88.18. So if you're in the trade, you would want to either get out of the trade, which is fine, or scale out and then continue to take our trade up to the take profit area of 88.23. So I would take it at like 88.18 or in that area. I think I would probably just get out of the trade there, because you know there's a lot of orders at that take profit fib. We're not the only one that fibbed that, and we're not the only one that sees that. So I would be a little careful in that area. So nice trade. The trade plan worked, and we'll see what happens in Asia if we can get to our take profit area of 88.23 or 88.18. I would feel more comfortable bailing at 88.18 myself. Okay, traders, let's take a look at our last currency pair for the Friday wrap-up, and this is the Aussie dollar 1 hour chart. This is a long-term outlook. This is an hourly chart. Look at how earlier in the week price sold off, went through the 200 exponential moving average, sold off again, came up to the top Bollinger Band, pulled back down, pulled back up again. If you look left of the chart, you could see resistance came right up there. What does it do? Bam! Pulls back down again. Now we're in a sideways price action for the last 6 hours of the trading day, which is basically New York lunch to the close. And you can see where price is now. You know I am a big fan of the 200 exponential moving average, and price is a magnet to that. So I am thinking long-term outlook that this Aussie, providing the fundamentals going all way, this Aussie is going to pull back to that 200 exponential moving average, traders, and we'll have a nice short there. As I would think, midway through the week, the US dollar should gain pretty good strength, and we can take this back to the downside on the trend of this 1 hour chart. So that's my look at the Aussie dollar going into next week. That's a long-term outlook. Traders, I'd like to thank you for joining me this week. It's been a pleasure being with you every day, giving you our market open preview, which we do before the London Open. And then again, every Friday after the New York close, we give you the Friday wrap-up. Until next time, traders, have a great day and have a great weekend. And on my behalf and the behalf of FXCL Excellence in Trading, we'll see you later. Bye-bye.